Hi, this is Amte with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 16th of March. Starting off with Amte, which I suppose at first glance doesn't look like a great prospect in terms of being a buy on this particular time frame, especially if you look back at the last year's performance. But we do have bullish divergence there in the RSI window, so the RSI higher on the last dip to the new lows, just below 70 versus what we had back in February, so a decent signal there. Also, we've got a reversal of that gap down that we had yesterday, so an end-of-day close above 72.5 pence would be a bear trap gap reversal. Could take the shares up towards 89 pence, powered by that bullish divergence in the RSI window. Above that, then obviously we're looking towards the 50-day line and form a mid-February resistance above £1 5 pence. But at the moment, just looking for 88 and at least an intermediate rebound. On to a more difficult situation, Amor, which is obviously affected by the Ukraine crisis. Here it's interesting to see that got a higher low in place after yesterday's dip towards a penny. We've also got the shares bouncing off, or the RSI bouncing off the uptrend line there from back in December, so that could provide positive momentum and at least give us another test of the gap fill that we had just a week or so ago through 1.8 pence, so above a penny, looking for 1.8 on Amor, even if the shares fall back again or they are affected by the geopolitical situation. Happier recovery here, a more obvious one for Berkeley Energia. I believe it's related to uranium. Here we are nearly hitting or nearly approaching the resistance line projection target from August that we were looking for, I think back in the mid-teens. Here the sizzle was provided by the rising 50-day moving average, which has been doing so since basically since mid-February. We had a gap reversal as well late last month on the daily chart, and the view now is above the 200-day moving average at 16 pence. 24 pence could be hit, and perhaps even more, given how strong the pattern currently looks. We started off this rally with bullish divergence there, so maybe you can compare and contrast that with the current position of Amte. Moving along to one of the year's best performers, and continues to be the case, Ben's Creek. Just rejigged the daily chart, or at least the resistance lines here, or the support resistance lines. The support now coming in towards 71 pence at that February uptrend line. The target here towards 120 over the next couple of months, which is a November resistance line projection. So it's still looking pretty strong there at Ben's Creek, and it's good to see that it's a sort of slow and steady progression rather than anything too spiky or volatile. News in for today from Caerus and Bizant, and looking at Keras, we've got a gap off the low, which is normally a good thing. The former support for the shares in December at 13.7, and that's roughly where we are at the moment. So we want to see an end-of-day close above that to give us the chance of a move towards the top of that broadening triangle from November towards the 20 pence level. You also see that the shares bounced off of that uptrend line in the RSI window, so that did provide positive momentum for the shares and led to the gap over and above the news from the company today. I think I tweeted out yesterday, I was so excited about Conroy Gold. We had an unfilled gap to the upside of support back in the end of November. That was also a gap through the 50-day moving average. So that was a really, really strong signal. And that led to a rally towards, 46p, something like that, within a couple of weeks. Similar setup here with the gap off support and then breaking a resistance line and the 50-day line yesterday at 25 pence above the 50-day line. We're looking for a retest of 46 pence maybe over the next month. We've also got an uptrend line, but bullish divergence line in the RSI window, which should power the shares higher in a similar way to what we saw in November, December. In fact, so far you could argue that the move is even stronger than it was back then. On to a stock which I suppose at the moment twinned with Amur, Eurasia mining. Here we bounced off the floor of that falling trend channel from back in June. Bit of bullish divergence coming in just at the beginning with that bear trap below 6.2 pence, so that's a positive. And some decent consolidation here. Obviously, the key is to break 10 pence, which may still take a while, and obviously is dependent on the Ukraine situation. In terms of the RSI, it's gradually improving, and that may also drag the price action higher over coming days, but still a difficult one there. And ideally, the longer we spend above the 8 pence level, the better, as that was the historic gap, I think, a couple of years ago, floor of the gap a couple of years ago, after the shares were suspended. On to a stock which I've been covering for a little while now, just in terms of its potential recovery. We've got Hemogenics. Here we've made good progress with the bounce off the falling RSI support line there, around the 1.1 pence level. It was a good reaction that we had off that support line there also from back in November. We've broken that line of resistance from February at 1.3 pence, and above that looking for a move towards 1.8 pence, 1.9 pence, which is the area of the 200-day moving average. If you're a fan of shares and looking for more yet dizzier heights, you would be targeting the top of the post-October triangle at 2.3 pence, maybe as soon as the end of next month. COVID in China means that the COVID stocks here have recovered quite well in recent days. We had bullish divergence on for Novacyt just a couple of weeks ago. Broke a trend line there around £1.45, £1.40 even, and while we're above the 50-day moving average at 206, we're looking for the 200-day moving average as high as 293. You can see on the last rally we sort of bull trapped through the 200-day line, so one would hope for a move towards 300, 310, maybe as an overshoot of the 200-day line, while we're above the 50-day line at 206. Next up is a stock which I don't think I've covered before, but people seem to be quite excited about it today, if they are excited at all, that is. Here we've got Pennpetro, which has gapped off support, which is one of our new favourite signals. Here we've got, or gapped off the low, in fact. Here we've got a situation where the shares have gapped up not only through the resistance line there from June, but also the 50-day moving average at 31 pence. Above that, and hopefully we could see the shares into the mid to upper 40s, which was resistance on the way down. Obviously, this is not a very liquid situation, so it is a bit of an experimental idea at this stage. An end-of-day close above the 200-day moving average at 37 pence would probably be 10 out of 10 in terms of flagging a potential move to the upside. On to quantum blockchain, which remains a personal favourite for various reasons, just the hopes of the technology, I suppose, as much as anything else. But here we've had a gap through the 50-day moving average after a bear trap below 1.9 pence. So, in fact, it was a gap close buy signal as well. We gapped down as an exhaustion gap there around 1.8 pence at the beginning of the month, and we closed above it to give us a decent buy signal. And it's interesting now that the shares are holding for the third time, or the second time rather, above the top of the gap. A very strong signal there. If that remains the case, then at least above 2.5 pence, we're looking towards that resistance line projection from May up towards 5 pence, maybe as soon as the end of next month. Finishing off with a rather volatile market, but one which may be tempting to some. Here at U Group, we've broken that line of resistance there from back in January at £2.26 and pushed ahead quite nicely. We also had a bear trap from below the old December floor at 2.19, a sort of two-day bear trap. So nice signal there, and an end-of-day close through 2.56 at the 50-day moving average could open up the possibility of a 2-month target as high as £3.80 at that July resistance line projection. That's it from me today. More updates tomorrow.